Did you know that following a big event, it will be impossible to purchase Tesla stock, according to Cathie Wood? Wood is well known in the investing community for being a wise investment advisor. So many people pay attention to what she says. See what Wood meant when she warned that it will be impossible to purchase Tesla stock by watching the video. Making a wise big decision can be challenging when experts are divided on a particular issue. Some investors in Tesla are still confident about their investment, despite the fact that other investors are quite concerned about the company's recent stock decline. You'll see why Cathie Wood stated that purchasing Tesla shares would be impossible following a specific event. Today's video. Before making an investment organizations meticulously evaluate the company's bonds or stocks. When making a wise choice, the stock market and economy are also taken into account. Analysts and investors closely monitor the swings in progress of Tesla stock. Despite the continuous fluctuations in Tesla stock prices, investors are still lining up to purchase shares because it is anticipated that Tesla will continue to grow going forward. Having said that, Ark Invest has revised its model for valuing Tesla stock, putting the price objective at $4,600 in the best case scenario for 2026 and as high as $20,000 by 2030. The most recent version of Ark's open source Tesla model predicts a value per share of $4,600 in 2026. The bull and bear scenarios, calibrated to the 75th and 25th percentiles of Monte Carlo results, are roughly worth $5,800 and $2,900 per share, respectively. Based in St. Petersburg, Florida, Ark Investment Management LLC, sometimes known as Ark Invest, is an American investment management company that oversees a number of actively managed exchange-traded funds. Ark Invest provides investment solutions to investors looking for long-term success in the public markets with a singular focus on disruptive innovation. The business is watching Tesla since it also makes investments in cutting-edge fields like genomics and self-driving automobiles. The company managed $50 million in assets as of February 2021. Cathie Wood, the CEO and CIO of Ark Invest, is an American investor who's been dubbed the most underappreciated investor in the game due to her ability to persuade others with her investment arguments and her proven track record of picking exceptional stocks. As noted by Forbes, Ark projected that their 2025 open source Tesla model would be worth $300, zero per share. They did, however, alter this position in light of significant modifications, such as estimates of capital efficiency, assumptions and inputs related to autonomous ride-hailing, and a one-year advance in the prediction to 2026. So Ark's analysis, Tesla's potential robo-taxi business line is a significant contributor, accounting for over half of the estimated EBITDA profits before interest, taxes, depreciation, and amortization, and 60th of the expected value in 2026. Although at much lower margins than the revenue from the robot taxis, they project that electric vehicles will account for 57% of the company's revenue in 2026 across the simulation set. The revised model by Ark Invest also improves Tesla's capital efficiency. When the Model 3 was scaling up in 2017, Tesla's capital investment per incremental unit of capacity was approximately $84,000. By the time the 2017 model was released, that number was closer to $7,700. According to their estimates, Tesla will invest between $6,000 and $8,000 for each additional unit of capacity by 2025. Given its significantly higher capital efficiency than anticipated, it's probably realistic to project that Tesla will invest between $2,000 and $7,000 for each additional unit of capacity by 2026. In 2026, Ark wants to see Tesla's share price reach $6,000 USD. The bull and bear cases for Tesla's potential 2026 value based on the most recent model upgrades are $2,900 and $5,800 per share, respectively. Should this occur, Tesla stock will become unattainable for the typical American, accessible solely to the affluent via its workforce. Elon Musk, the CEO of Tesla Inc., claimed that he agreed with Cathie Wood when she said that if the company performs well, each share of Tesla may be worth $3,000. As was previously indicated, it should be recalled that Wood recently said in an interview that their assessment of Tesla's success has increased and that her base case for the company is about $3,000 per share. She clarified that this is because, in spite of other businesses' forays into the electric vehicle sector, their market share increased significantly rather than decreased. As early as 2025, Ark Invest predicts that Tesla will be able to produce between 5 and 10 million cars. According to Musk, if the business performs well and does truly have a price tag of $3,000 per share, Tesla will be valued at over $3 trillion, making it the most valuable corporation in the world. With a valuation of more than $730 billion, Tesla is currently regarded as the most valuable car manufacturer in the world. Remember to hit the like and subscribe buttons if you want to see more of our Tesla stock material. In January 2022, Goldman. Sec Wall Street analyst Mark Delaney raised his price objective for Tesla stock from $1,125 to $1,200 while keeping a buy rating. As the greatest concept in the electric vehicle industry, he also ranked Tesla as one of his top picks for 2022. He went on to say that Tesla is the industry leader in electric vehicles. Even while this increase may not seem like much, it is only for this year, so who knows how much more it may rise in the upcoming years. Even the American Independent Investment Bank and financial services provider Piper Sandler companies increased its target price for Tesla to $350. According to Piper, given the possible increase in value of the stock, it anticipates Tesla will produce more cash. Adam Jonas of Morgan Stanley, another well-known Tesla bull, claimed that the current EV market is a race that Tesla has so far been dominating. In his metaphorical comparison of the electric vehicle EV sector to a marathon, he stated that Tesla is leading at mile 21 while other companies are still at mile 2 and are still tying their shoes. In order to bolster his argument, he provided data on recent car deliveries, which show that Tesla is still in a solid position and is getting stronger as the marathon goes on. In addition, he updated his target price of $1,300 for the automaker's shares from $1,200. And he went on to forecast that this year's delivery statistics will surpass 2 million. For cash flow, Morgan Stanley predicts that Tesla will produce about $9 billion in free cash flow this year, and that figure will climb to $27 billion by 2025. Why invest in Tesla stock? A recent article in Barron's Magazine, an American weekly monthly newspaper covering market movements, pertinent statistics, and U.S. financial information, suggests that this is an excellent time to purchase Tesla stock. The discussion is far from over, with some analysts predicting a crash and others expecting profits of over 100. Analysts note that shares of the leader in electric vehicles appear exceptionally attractive based on two indicators. For Tesla shares, the average price objective is approximately $984, which would indicate a 35% increase from current levels. That when the market plummeted in March 2020, when the pandemic struck the United States, that was the last time the statistic appeared so favorable. Dave Lee, a well-known YouTuber who specializes in investing-related content and goes by the handle Tesla Bull Enthusiast, recently published a post detailing how he raised the funds for his initial Tesla stock purchases for almost 100 times its true value. He revealed that when he first purchased Tesla stock, he anticipated that the company's market valuation would grow tenfold from $3 billion to $40. Lee continued by saying that history might repeat itself. He claims that the same mistakes that were made with the original iPhone are being made with Tesla. He is adamant that Tesla is only beginning its journey towards innovation that embraces complexity. After acquiring common stock for 8 years, the well-known YouTube investor revealed that he was taken aback by the 100x growth in his Tesla stock. As a result, he thinks that in another 8 years, the stock may rise even further, possibly by 100 times. Despite the fact that some investors sold their equities because they no longer had faith in the firm, Tesla continued to outperform Wall Street estimates. The founder of Baring Capital, an investment management company, and an American mutual fund manager named Ronald Stephen Barron, stated that Tesla easily outperformed Wall Street's projections of $2.20 to $3.30 per share and $18 billion in revenue. Furthermore, Tesla's operational profit of roughly $1 billion exceeds the projections of analysts. As a result, Tesla shares saw a notable boost in after-hours trading, rising $5 to $17 per share from roughly $976 at the close. As was previously noted, investors and experts have varied views on Tesla's present position in the stock market, but many of them are still optimistic and think the company is a wise long-term investment. But if Cathie Wood's prediction comes true, and Tesla stock is $3,000 a share. The average American will never be able to own stock in the industry leader in electric vehicles. View our other videos for additional content related to Tesla stocks.